The U.S. is continuing to diverge. Meta shares not diverging from the rest of the complex. Shares falling after the company warned of a, quote, uncertain revenue outlook for next year. Yeah. This was the dominant narrative, even though the tech giant beat expectations on third quarter revenue. All of this dashing hopes for a long-term recovery in the company's advertising business. It's spending, though, aggressively in other areas, in artificial intelligence and virtual reality. It raises this question, what are people hinging on to? Just this hope of uncertainty or expectation of uncertainty that we all know?
Just Instagram. It's just Instagram. It's what Strymon's doing over at Instagram.
Real. Plastics. Mandeep Singh, Senior Technology Analyst.
I sit there on Instagram and go, that's a short.
Bloomberg Intelligence joining us now. Mandeep, what does it tell you that they came out with really good earnings, at least on the fundamental basis, that they say that there's uncertainty and that the shares sell off?
Well, so I think they gave a pretty broad guidance, 13 to 24% for next quarter. When you see that sort of wide guidance, the company is not sure. And they didn't have that sort of uncertain guidance on the expense side. So they said Reality Labs losses would mount. And I think where the company is really failing the investors is not giving them markers around what they are actually doing. I mean, losing $15 billion a year on Reality Labs and not telling what you are investing in. Because we know Apple has a new virtual reality headset. It didn't take them $15 billion to make that headset. So clearly they are investing in something that nobody knows. And I think that's the uncertainty.
How is AI different for Zuckerberg than AI is different for Google, where AI is different for Microsoft?
So there is an overlap between Google and Meta's version of AI versus Microsoft's. And
Microsoft's corporate, I got to get a job done, let's go.
Yeah.
What's Meta's AI?
Meta's AI is you're consuming Instagram feeds, Facebook feeds. The average user is. And so how can AI enhance that experience both for the consumer as well as for the creator who's creating content for the feed? And AI can offer you a lot of tools to generate images based on text description. So there's a lot that AI can do in messaging. Think of customer service, WhatsApp.
AI and Instagram, I don't buy it. AI and Amazon this afternoon. What is Josie going to spin on AI at Amazon?
I mean, Amazon's story
cardboard box
is about compute. Training the models. Everyone wants these GPUs to train their large language models.
Yeah, but they're buying AI from Microsoft. I saw that 10 days ago or so, right?
Yeah, well, they are upgrading their 365 on-prem version to Microsoft.
I'm completely lost.
And so that's the thing about the generative AI wave, that it is quite broad, and every company can use it in different ways. Some companies are focusing on training models, some are focused on inferencing use cases, and
you don't even know what this is, Katie. It feels like a Mork and Mindy skit where, Robin Williams is going, no. Everybody's got a different definition of AI.
Or I guess they're trying to play for a different part of this large pie that everyone sees with generative AI.
Save me.
Well, let's talk about something we all know. Let's talk about the cloud business at Amazon. Of course, AWS, you saw sales growth there slow to a record low in the second quarter. We know that the cloud business was why Alphabet had such a bad day yesterday. What are we going to see out of the cloud business at Amazon?
I mean, the good thing is expectations are lower for Amazon, and we're talking about mid-teens growth for AWS. And yes, it has the largest base in cloud, but everyone perceives them to be behind with generative AI workloads. That may not be the case. And so there is room for an upside as long as they prove to the street that, they are catching up with Gen AI and offering the compute that everyone needs to train their models.
And not to go back in time, but you think about what happened at Alphabet. I mean, I'm just stuck on the share price move yesterday, down almost 10%, worst day since March 2020. Is that an overreaction? Was it that bad?
With Alphabet, it definitely felt like an overreaction simply because the search business actually did remarkably well. And unlike Meta, which continues to see ad pricing decline, Alphabet saw an ad pricing increase, which is a positive sign. It's an auction mechanism, so advertisers are bidding up for your ads. And there was talk about uncertainty yesterday around the Middle East war and everything that will draw down the advertiser spending. But clearly, Alphabet had a positive print on the search side, and the cloud side, really, the expectations were too high. So I think that's where Amazon may have an advantage going into the print.
I want to try to understand the psychology of the investor base in some of these tech names, because it's been shifting over time, and we've seen that. What are we learning about what the key triggers are going to be to buy and what the key triggers are going to be to sell after the gains that we've seen so far this year?
I mean, look, the cost of capital is going up. And so I think the days of spending $15 billion a year on moonshots are probably gone, even for larger companies. As long as they keep delivering, 20% plus growth for Meta, everyone is okay with them spending on Reality Labs. The moment that growth decelerates, that's when that $15 billion loss really becomes a sticking point for free cash flow.
Is that the reason why you expect things for Amazon to be positive? Because they have that infrastructure, AWS, which is the major player in the cloud space. They have that revenue coming in. They have Tom Keen's offspring buying lots of boxes. How much is that really going to play into a positive that could offset some of the negativity that we're hearing from the likes of UPS this morning?
Clearly, I think everyone believes that, digital transformation, generative AI, these are secular trends. And right now, I think for Meta to spend $30 billion in CapEx and not have a cloud business or something equivalent is also sticking out, because that could have been a key source of diversification for them.
This is an arch question. Do you and Anurag Rana see the cloud business? I have no idea what I'm saying. When you see the cloud business, is it a classic duopoly or triopoly, or can there be a set, number of 5, 6, 7 players? I just don't buy it.
I mean, right now it's a triopoly, and Oracle actually is investing a lot in building its
They're
cloud
investing,
business.
but do you believe people can grab share and come down and make a fundamental free cash flow generation, or is it going to squeeze into a triopoly?
No, I think you can, because right now the nature of compute is changing. So it's not CPUs consumed on the cloud anymore. It's GPUs, different types of accelerators, different types of databases. And that's where, if you don't have a legacy business, which Microsoft does, I think Google has an advantage, Amazon has an advantage that they don't have a legacy business. And that's where they can keep building that.
Mandeep Singh, thank you so much.